Just as Bitcoin, BTC, hits new all-time high above $35,500, industry veterans have started making fresh predictions for BTC price in 2021. Max Keiser, who is popular for making BTC predictions based on hash rate adjustments, has a new target for Bitcoin this year. Here is Max Keiser revealing Bitcoin price forecast for 2021 after nailing the 2020 call. If you're a subscriber, well, welcome back to Investing View. But if you're new to this channel and you want to enjoy more of our engaging content, make sure to click that subscribe button and use that trigger finger by smashing that like button. Now, let's get into it. What is Bitcoin? First, a quick refresher for the uninitiated. Bitcoin is one of many digital currencies. Unlike traditional fiat currencies created and operated by government and central banks, Bitcoin is mined or created by people who solve mathematical problems with computing power. Transactions are kept on the blockchain, an encrypted and decentralized ledger that protects the integrity of Bitcoin while also ensuring the privacy of the user. Wall Street veteran and Bitcoin firebrand Max Keiser says he believes Bitcoin will ignite a massive rally this year on the back of central banks' loose monetary policies. 2 years ago, Keiser made an accurate forecast that Bitcoin would end 2020 trading at around $28,000. Now the Bitcoin bull is back with another year-end prediction. In a new interview with Stansberry Research, Keiser says he expects Bitcoin to surge nearly 550% from its current price of $34,000 before this year expires. Quote, "I'm going with $220,000 per Bitcoin as a 2021 target, and that would bring us up to $4 trillion market valuation, which I think is a good 2021 objective. We are going to catch up to gold. That would bring us up to not quite half of gold's valuation, but getting close to gold's valuation. I think the catalyst is going to be, as I said, a major central bank failing, plus the money printing is going to go absolutely Weimar Republic." Keiser is also predicting turmoil in the macroeconomy. He expects one of the major central banks to collapse in the year ahead. Quote, "One of my predictions will be one of the major central banks in the world will collapse in 2021. They are highly leveraged. These banks are leveraged 50, 60, 70 to 1. One of them is going to collapse in 2021, and that will start an avalanche. Out with fiat money and paper money, and the top beneficiary of that will be Bitcoin. That's one of the catalysts for Bitcoin's price appreciation in 2021. Last month, in December 2020, the Bitcoin network registered its highest ever hash rate at 136 exahashes per second. As of the production of this video, the BTC hash rate has topped 148 exahashes per second, as per info on blockchain.com. As per the chart provided by the platform, the Bitcoin hash rate has surged 12% just over the last week. Keiser, who predicted $36,000 BTC price based on hash rate adjustments, notes that BTC price will hit $220,000 by the end of this year. In his latest tweet, he writes, "$36,000 BTC was the hash rate adjusted price I flagged last summer. Hash rate leads price, with HR hitting new highs. 2021 target of $220,000 comes into focus." The surging hash rate shows the growing fundamental strength of the Bitcoin blockchain network. Let's look at some of the other on-chain metrics suggesting a bullish scenario for Bitcoin. Interestingly, Keiser's predictions come a day after JP Morgan gave a long-term target of $146,000. On-chain data provider Glassnode notes that Bitcoin's current MVRV Z-score is around the level seen during July 2017, after which it surged 10 times in the next 6 months, hitting its 2017 high of $20,000. Thus, as per the same metrics, Keiser's $220,000 price prediction for BTC doesn't look far-fetched. As stated by Glassnode, the MVRV Z-score is used to assess when an asset is overvalued or undervalued relative to its quote fair value, as underlined by the deviation between its market cap and realized cap. On the other hand, Bitcoin's bull case scenario refuses to weaken at any cost as heavy as BTC accumulation continues on Coinbase. However, the Bitcoin future market's open interest has hit an all-time high above $11 billion as by data on bybt.com. This suggests that the market is extremely overheated at this point. Proponents of digital currencies are exuberant about the potential for 2021 after a monster year that saw high-flying Bitcoin prices grab control of the spotlight. That's nothing new, but the much wider feeling across Wall Street that this time it's different is Bitcoin prices recovered from a multi-year slump in 2020. It breached its 2017 record near $20,000 in November, and it has gone parabolic ever since, sitting well above $40,000. What might actually make this time different, however, isn't that Bitcoin prices hit new highs in 2020 and finished the year with a head of steam. It's that the cryptocurrency succeeded in its first trial by fire. The resilience of that digital coin and others, and the reasons behind it, have many excited not just about the prospects for this young asset class in 2021, but also for the overall adoption of this burgeoning financial technology. Bitcoin prices crashed after sharp rallies in 2013 and 2017, but these declines weren't precipitated by any major event spanning multiple asset classes. The digital coin was merely cut by the other edge of the speculation's blade. Worried about hacking risks, for instance, hampered cryptocurrencies in 2018, so the bear market of 2020, brief as it was, marked the first time Bitcoin and other digital currencies faced a truly global crisis that threatened numerous types of investments. Cryptocurrencies were hardly immune from the bear turn. Investors first started selling off equities in February as they moved to cash, and even safety plays such as gold eventually took a dip in March. But Bitcoin eventually fell too, crashing hard in mid-March. Those lows were short-lived, however. Digital currencies bounced hardest off the bottom, and Bitcoin turned positive by April. It then took flight through the end of 2020. A push to liquidity, such as the one seen in March, is rare, and it usually occurs at the climax of a market sell-off. The fact that it also happened in Bitcoin around the same time hints that more institutional interest was in play than previous crashes. And growing institutional interest is one of several trends that King expects to be a major driver in Bitcoin prices over the years to come. Coinbase, a digital currency exchange that's expected to go public this year, said on November 21st that its institutional assets base from $6 billion in April 2020 to $20 billion as of mid-November. And Canaccord Genuity recently pointed out a laundry list of recent institutional and other noteworthy cryptocurrency events. Bitcoin is attracting a growing number of analysts, and as a result, Bitcoin price targets are becoming more commonplace. Some have been downright bombastic. Former Adaptive Capital partner Willy Woo calls $200,000 a conservative estimate for year-end 2021. In mid-November, Citigroup told its institutional clients that it sees the potential for Bitcoin prices to rise as high as $318,000 by the end of this year. Others are more restrained. For instance, BTIG's Julian Emanuel says Bitcoin could reach $50,000, the same price target Bloomberg pointed to in its Crypto Outlook 2021. There are many reasons to invest in Bitcoin after understanding the market and risks. Anthony Denier, CEO of Webull Financial, considers digital assets like Bitcoins to be useful for portfolio diversification. Specifically, less correlated assets are known to help overall investment returns. In the case of Bitcoin, Denier joins the ranks of those who consider this crypto asset to be a hedge against inflation and geopolitical uncertainty. He calls it this generation's liquid gold. As Bitcoin becomes more widely accepted as a method of payment, it gains acceptance as a legitimate asset class. High net worth investors are dipping their toes in cryptocurrency investing, says Satvik Vishwanath, CEO at Unocoin, India's oldest cryptocurrency exchange. With low interest rates and global macroeconomic uncertainty weighed against cryptocurrency outperformance, the wealthy are becoming more comfortable with the asset. Bitcoin evangelists are on board with the cryptocurrency's benefits, but like any investment, there are also risks. Bitcoin might have a rosy future, but imagine if you'd purchased on December 17, 2017 for $19,140.80 per Bitcoin. Your investment would have lost money during the subsequent 3 years. At the recent price of $13,688.70 per coin, your 3-year investment declined by 28.48%. When investing, it's wise to buy low and sell high, but Bitcoin is difficult to value. It's volatile and lacks the dividend payments of many stocks and bonds. Actually, supply and demand may be among the major factors in its valuation. If you think Bitcoin is a good investment for you, consider its risk-to-reward profile and do your homework before investing. What can you say about Max Keiser's Bitcoin price forecast for 2021? Let us know in the comments section below. And hey, if you enjoyed the video, don't forget to like and subscribe to our channel so we can continue giving you the best content. Thanks for watching, and we'll see you in the next video.